Hi friends, this is NMK Vijay and welcome to my YouTube channel Forex at First. So this is regularly what we are doing is weekly analysis, and last time I did the as a positional view also. So I'm getting a lot of messages about the basic Elliott waves to make a video of basic Elliott waves, and I need to explain that. So this is the right time because of the Christmas holidays and the New Year, and the market is silent, and that much is not movement is there. So this is the right time, I think so, and I have decided to make all videos regarding that Elliott wave basics of impulsive wave as well as corrective waves. So only the Elliott waves contains of impulsive and corrective, nothing else in that. So impulsive, you know very well about that. It's a 1 2 3 4 5 and the correction is ABC. So that's I will make a video. This is a part 1 of impulsive, and after once it completed, and we will move on to the corrective patterns and with the chart explanations. What I'm doing is, I'm just not explaining through what it is in the book. I'm just showing all that analysis done by me. So I will explain each and every wave. So before we get into this educational video of basic impulsive wave, so this is my disclaimer. You just read carefully. So I'm not asking any investment. So be cautious and beware of the fraudsters. I'm not responsible for any losses if you took the trade according to my trade plans. And what I'm educating here, it's all according to my knowledge. I'm just sharing how I'm analyzing the pairs. So let's move on to that Elliott wave theory. Yeah. So this is very simple. It looks like very simple, but it is tough in that live market to apply the Elliott waves. Lot of people asking lot of doubts, and you will get lot of doubts while you are a beginner. So I suffered like that only in the previous also, and I'm using this from 2012. I entered blindly in the market, and after that I studied the lot of things about the candlestick chart one by one, and finally in the 2014, one of my friends said there is an Elliott wave. You just read that and apply that market. You may make a consistent profit. So I started from the 2014 and 2016 as a part-time, and from the 2016 to 2020 as of now, I'm a full-time trader. So if you Google it and as an Elliott wave theory of or an Elliott wave, you can get a lot of PDF files also. So if you want, and I will attach this PDF file in each and every video. So to you can read that, make an hard copy, not in soft copy, and make it as a book. And while you are analyzing the chart, you just kept in front of that system, and you can learn each and every page step by step. So we will first start from this impulsive wave. So how we have to start, right? So first we have to be in the monthly chart, or if you are in a positional trader, and then if you are a swing trader or an intraday trader or a scalper. So I'm using only this Elliott wave, but I'm not doing any scalps. Sometimes I will do only the intraday according to that wave counts. So just we will look from the first starting basic is the impulsive wave. So here each wave got on 5 waves inside that. So that is called as a 1, that consistent of the 5 waves is called 1. And for this impulsive move, we will get a corrective structure, so that the corrective structure will be at the minimum of 38.2 retracement of this impulsive move up to 98 or 99 also. So it depends upon the correction how it makes, right? So this is a wave 1, and wave 2 contains of a three-way structure as a corrective to against this trend. After that, this is a continuation trend, third, and again that fourth wave, and again the fifth wave. So if you are seeing, or if you are listening to this, it's very easy. So just I will show you the one example. So this is the example, clear example. What you learn is 5 ABC and the impulsive wave. But in the real market, it won't be like this. Sometimes it could be like this, or sometimes it could be like this, right? So this is a fine example I'm showing you. So it won't be like this. These are all only just for an identification of the trend. That's it. You just keep into the mind. These are all that marks what we are doing is the for the identification. It's all psychology. So if it is there impulsive wave, it will be a continuation, and then there is an reactions for that profit booking of that who the traded here and bought, and they will sell. So this is contents of all psychologies also. This chart is replicates that psychology. So this wave 1 and 2 is a corrective wave, 3 is an impulsive, 4 is a corrective, and the 5 is also an impulsive. So this one set is completed. The next is the whole 5 waves like this. How in the minor you will get the wave 1 and the wave 2 is a corrective. Once the 5 waves completed, you will get the three-way structure to the downside to retrace this 0 to 5. So this kind of waves is called as a primary or one cycle, you can call it as. So it's all here. So this is a sub-minute, minute, and this is a minor, intermediate, primary, cycle, super cycle, and grand cycle. So we don't want to get in this deeply. So I won't do that. I will just simple. I will show you and how to applying the wave principle. You just read carefully everything what I have attaching this PDF file in my disclaimer. Yeah, okay, in that comment box sections or in the descriptions you can go through. And this is a part 1. So we will start with the basic pattern. So this is a wave 1, wave 2, wave 3, wave 4, and wave 5. So wave 2 and wave 4 is a correction, and wave 1, wave 3, and wave 5 is an impulsive. So how we have to find that? So just I will show you for example, lot of examples is there. So first we will start with the USD JPY, and this is the in the chart we have lot of things from the top to the bottom. So I will just show you the for example. Don't concentrate in that left and right. I will show you here. Here as one second beyond light. Yeah, there was a little bit disturbance. That is what I have passed this. So let's move on to this. So here we find this kind of impulsive wave. So how we are looking for this? So first of all, you need to understand here it's looking like wave 1, 2, 3, 4, 5. And this wave, it won't be like this. It will extend it. In that case, see, lot of times the third wave will get extensions. So that I will get into deeply. I will show you, and how you have to count is because of this kind of third wave extension. This is the normally it will do like maximum that 70 to 80% it will be like third wave is the extension. So here it's a wave 1, wave 2, and lot of beginners will do the mistakes. Wave 3 and wave 4, they will count like that. It won't be like that, because first of all you need to understand that Elliott wave 1 cannot go below the wave 2, sorry, wave 1, and the wave 2 cannot go below the wave 1. The first rules is there. And the second rule is wave 4 cannot overlap, or it won't go below wave 1. That is the second rule. And that is an exemption case. It will overlap only in the diagonal triangle pattern. That we will see on later. But first of all, we have to see this. I will show you here. This is the 0. So 1 will be like this, 2 will be like this, 3 will be like this, 4 will be like this, and 5 will be end. But from 0 to 1 there will be a 5 waves, and 1 to 2 there will be a 3 waves. So like that it will continue. But here, first of all, for the beginners, if you see this as a wave 1, and this is a contained structure of a corrective wave, is a ABC, it's a 2, and we can't make it, the rule is violating here. So wave 1 high, it won't overlap the wave 4. So we cannot put this as a 3 and 4, because it's violating the Elliott wave rules. Wave 4 cannot overlap the wave 1. Sorry, wave 4 cannot overlap the wave 1. So here we need to, the third way is extension. How here it is explained like this. So wave 3 also contains of 5 waves like that. So this is the bigger wave 1, and this is the bigger wave 2, and this is the wave 3rd. This is the intermediate wave 1, 2, 3, 4, and 4 here is a triangle. And the one more basic rules is the triangle will appear only in the 4th wave corrective pattern, not in the 2nd wave. You just note it down, all the points what I'm explaining here. First rule is wave 1 and wave 2 cannot go beyond the wave 1, and wave 3, after finishing the wave 3, wave 4 cannot retrace or overlap the wave 1. So first 1, 2, and the next one is wave, in that wave 2 triangle won't happen, only in the 4th wave the triangle will be there. So as of now, wave 1, wave 2, wave 3, 4 is a triangle, and the one impulsive wave. So this is contains of 1, 2, 3, 4, 5. So here is a bigger 1, bigger 2, so bigger 3, bigger 4, and that 5th wave also got a 5 wave structure. So how we each and every wave got a 5 waves, in this also wave 4, and the completion of the 5th wave is also got 1, 2, 3, 4 is again triangle, and 5. So the 5th wave is also completed. So here one cycle is completed. So you forget about this. So this is the wave 1 in that bullish scenario. That same thing as well vice versa in that bearish also. I will show you that. So one cycle is completed here. That means in the bullish we get 5 waves. So according to this pattern, this is the first wave extension, and this is the 3rd wave extension, and this is the 5th wave extension. I will show one by one, but this is the 3rd wave extension I show you here. I explained here. And here one more is wave 1. You can go through that Fibonacci extension. You just click here. You will get that trend based Fib extension. In that, how you have to place here is at the end of the wave 1, the starting of the wave 1 and end of the wave 1. So from 0 to 1 and getting rejection of the wave 2, the third wave is above 1.618. It has to be 1.61. See, these are all as per the book, as per the theory, how I am explaining. So it could be 1.618 and it could be 2.618. It depends upon that buyers and that trend. So here it did about 2.618. So in that case, you note it down. Wave third is the biggest wave in the 5 waves. So here they didn't mention that. Here in this, it's all everything is equal, 1 2 3 4 5. But in this book, if you read completely, then you can understand that. So wave 1 is a simple one, and wave 2 and wave 3 is above the fib extensions 1.618. That means this wave is more than twice, it's near to the twice this wave 1. So yeah, the third wave has to be 1.618 and above. So that means it's a 1.7 times than this wave 1. So in that case, you know very well about this. The wave 3 is the bigger one. So everybody knows that wave 1, after the wave 1 completion and after that correction, the next starting is the wave 3. So here it's a 1 2. So as per that fib expansions level, here is a wave 1 and end of the wave 2, we may get that around a 2.618 above. So the fourth wave is also a triangle and fifth wave got ended. So in that case, here also that and one more thing, you have to note it down. The target you have to fix after the fourth is equal to wave 1. So in that case, if you place this as a 0 to 1, you just go through that at the end of the fourth wave, you will get exactly that one level. So this wavelength and the fourth to fifth wavelength is equal. So here is a completion of the third wave. So after that, the fourth wave, what I said is only in the fourth wave it will be a triangle. So here is a triangle fourth wave, and again 1 2 3 4 5. So here also that completion, and the next you have to note it down is wave 1 is equal to wave 5, or it could be 0 to wave 1, that is 0 to third, and then the rejection, the completion of the end of the fourth wave, it is equal to 38. It's not equal to, sorry, it's a 38.2. From 0 to third, it has to be 38.2 as a first target, and the second target is 61.8. So it could be an more than that also, but you have to watch this where the fifth wave end. So sometimes it could end here also, because inside the wave is also a 5-way structure. So it could be, and if it is still bullish, it will continue. So 1 2 3 4 and 5. So this is the completion of that one cycle 5. So you can understand, you can watch and replay my video, and then you can understand what is the points you have to note. And then this is the one chart, and this is in bullish. The same thing in bearish. So this is a weekly chart. So weekly chart also, this is the wave 1, 1 2 3 is a correction part, and this is the wave 2. Once it's completed, see the extension also, the wave 1 and the wave 2 is retraced. Minimum it has to be in 38.2, and the maximum is 98 also, but it do not to go beyond the wave 1. You have to understand that. So the maximum, the golden thing is the 61.8, and the next is 78.6. So exactly it got rejected at that 78.6, and again it started for that continuation of that trend. So 1, 2 in the correction part, and here the third wave is also got. You mind that it also got that 5-wave structure. So there is also 1, 2, 3, 4 and that 5 waves. So if you go through in the daily chart and then again in that 4 hours, you may get these all 5 waves inside that. So these are all just only for that identification of the trend. So here the 1 completed, second is also completed, so third is completed here of intermediate waves got, third wave is also 1, 2, 3, 4, 5. And if you apply that as per this extension wave, it is nearing to that 1618, right? So, and here also wave 1 and wave 2, it's a 2618. And what is the target I said? It's a 0 to 3, here is 0 to the third, to the rejection fourth. You may get the 38.2 or 61.8. So it is completed here, the 38.2 within the 50%. So within this we may get that you can fix the target for that fifth wave. Once you saw this 1, 2, 3, 4, and then you have to decide that fifth wave target is 98.91 or it could be 61.727. So within this it has to get rejected. So it's exactly it did the same. So once the 1, 2, 3 is completed and the fourth is also a corrective pattern like this, and after that this is an ending diagonal that we will see in the later video. And the diagonal patterns, there is a lot of diagonals, leading diagonal, ending diagonal. So ending diagonal will happen only in the end of the trend in fifth wave, or it could be in that C wave. C wave means we may get that A, B, C. So in that C wave we may get that ending diagonal. So you can note it down again, lot of points what I'm explaining here. It's all everything, each and every point has to be very important, has to be noted. So ending diagonal happens only in this end of the trend in fifth wave or in the C wave. So after the fourth, that A, B, C is that we will see later. So here is the ending diagonal and the fifth wave is also completed. For example, just we go through this. So here is within the 38.2 is completed because of this diagonal. It is a slow movement. That means the buyers are aggressively here. So the trend is going to change. So that you have to understand, it's everything we have to fix is not according to the book, just the points or just for our identification only. So I think you can understand this. We have finished that bearish as well as here is the bullish. So we will see some more charts. For example, it's not only in USD JPY, it is also in Euro USD. So Euro USD, this is also the weekly chart. See, and one more thing I have to explain in USD JPY. See here wave 1 and wave 2, and here it is crossed above the wave 1. So that is also because of that Elliott wave theory. The wave 3 cannot, sorry, wave 4 cannot overlap the wave 1. That is why we placed it as wave 1 and wave 2, and again the intermediate wave 1 and wave 2. But in Euro USD it is something different. Okay, yeah, here it is something different. This wave 1 here and here is the wave 2. and here that third wave is going extended. So here it didn't go above this wave 1, it's inside the wave 1. So this will also happen, not above the wave 1 also. Sometimes it may, and sometimes like this inside the wave 1. So this is also wave 1 and 2. And sometimes what we will do is, here according to the Fib expansion, this is above 618, so we can make it as a third also. So fourth and fifth, here it is completed also. So in that case, right, so as per this 1 2, so 2 is a corrective pattern, this is an impulsive wave, 1 2, so here 3 4, and the fifth we can go through like that also. But here what happened, it's extended. We don't know how it could extend it. So as per this, if we are in the live chart, we would maximum we will do like that only, but we can extend that the third wave can go above that also. So in that case what we will do is, we will simply make it as 1 2 3 and 4, we completed here as a 5. And what it will do, this wave 1, this wave 2, it's above 618, so we can mark it as a 3 also here, 4 and 5. But if you go through the inside the chart in the daily, you may get here that wave is not yet ended here. So in that case, here I will show you that sorry, in this wave 1, wave 2, the intermediate wave 3 also got extended. So again wave 1, again wave 2, and it contains wave 3 is also got inside the 5 wave structure, and again the third wave got finished, and fourth wave is a corrective pattern, and that 5 waves is also it's got over. So in the intermediate third wave is also get extended. You try to understand, but while it's applying, see, even if it completed we can mark it as anything, but if we are doing the trading here, we will do like that only. We don't know how it could extend it. So what we will do is, maximum it will go above that 1618, that we know, but here it's also completed. So 1 2 3, we can make it as a 4 and 5, but it will identify only in the channel. So that we will see later onwards. Channel 1 here, for the end of the third, it has to be ended there. We can make it as a blue. So these are all identifications, and just we will clone this wave 2 and wave 4 here. So this will travel within the channel. So wave 1 and wave 3 will be the end of that channel here, and wave 2 and wave 4, if we connect this, we can identify this is the third is still going on. So if we connect here also, it will be there. So within the channel, so this third wave is also an extended. So 1 2, here is the end of the 3, and 4 is a triangle, and here is a 1 2 3 4 5. So it will happens like this in all the forex market, not only in the forex as well as stocks. So this is an impulsive way. After that, this is a corrective pattern. So it will keep on doing the same thing. It's the fractals. So just we will see the stocks also. One thing is Nifty. So in Nifty also doing the same. Stocks is the indices. 1. So here is it's called as a leading diagonal. So the diagonal pattern we will see in the next video. And here is a wave 1, rejection of the wave 2, and 3 4 and 5 is completed. So this whole thing is a wave 1. After that 2, and here is a wave 1, wave 2, and this third wave, for this third wave is also got extended. So 1 2 3 4 5, third is completed, and for this 1 2, and just we place that channel, just clone this. So here is the end of the 1 2 3 4 and 5. So for this one, this 2, this is the 3, and the corona drop is the 4, maybe 4, or it could be still we are in that, and we are in that 1 2 3 or 4 and 5 has to end. It's already ended or it's going to end. That we have to watch in that daily chart and 4 hours, then you will come to a conclusion. So it will happen like this, and each and every stocks, commodities, or whatever it is. So if you need to watch the commodities also, you just go for the gold. See, this is a wave 1 2, and wave 3 is got extended 1 2 3 4 5, and here is the end of the fourth. It could be a triangle, and then fifth wave it's above this level. So as per this rules of Elliott waves, 1 and the end of the 2, it is more than 1618, the third wave, and that rejection has to, you have to note that wave 2 will retrace this wave 1. Minimum is 38.2. Sometimes it will be, if it is very bullish or with the fundamental uses, it could be 23.6 also, 38.2, or it could be 61.8, or it could be 78.6. But as per the Elliott waves, they mentioned that 61.8 is the wave 2, but it's applying that in the real market, it's very difficult. It can do deeper also, it can be in the simple corrections also, it could be a complex corrections also, so that we will see on later. So first we will finish this. So wave 2 retest, for example, we will see that fib retracement. For the retracement we have to switch to the retracement tool. So here it retraced within the 61.8 to 78.6, and it is accepting this rejections, and the wave 3 is also got extended up to that 1618, and the target is, how we have to measure that is the fib extensions tool 1 and equal to wave 1, wave 5 is equal to wave 1. So in that case we have to keep this in the wave 4, it is in triangle, so I just kept this here exactly at within this 78.62 1, it got rejected. So the high is made of 2083, so within that it got rejected. So this wave 1 is equal to the wave 5, so that is the target, and I have already shown in my weekly analysis also. And wave 3, so wave 4, how much it get retraced. So sometimes, so the as per rules, wave 4 cannot overlap this wave 1, right? So it didn't overlap here, and it did exactly the 50% of the third wavelength, 50% of the third wavelength. So from the start of the third, we need to keep at the end of the third, starting and the end of the third wave. Sometimes if it is above the 618, sorry, 1.618, if it is a 2.618 or 3.618, it will do only 23.6 retracement. Otherwise it could be a 38.2 if it is 1618. So here it did 50% retracements. For example, we will see in USD JPY. So in USD JPY, here So wave from that wave 3, so here is a wave 2 is ended, so here is a wave 3 ended, so it is 23.6. Within this it has rejected and then again it can shoot, it shooted. So for example here we can test perfectly, it retests 38.2. so that fourth wave will retrace to the third wave up to 23.6, 38.2, and that sometimes maximum if it is in bearish of something, any fundamental news, it will retest that 50% also. But the one thing is it don't want to overlap the wave 1. That is the thing, main thing you have to, sometimes in the news some it can retest like this kind of also 61.8 or 78.6 sometimes, so that is an exemption cases, and then again it can shoot, that a week will be there. So I think you understand the basic, so we will continue and I will keep on uploading. The next thing is, and that first third wave is got extended, we already seen, and we will see in that that fifth wave is also got extended sometime as per this. Here that fifth wave in the bullish, fifth wave is also got extended. Sometimes maximum most of the things the third wave is got extended, and sometimes it's a rare cases in that wave 1 got extended, and most of the time in that commodity market the fifth wave got extended. So for this one we can make an example of USD SJD in the intermediate wave in the daily chart. Here this is an intermediate wave of third, so one is completed here, second is also completed here, third, fourth, and fifth wave got extended. So according to the extended rules, the 0 to third and the rejection fourth, sometimes it could be 1 also, or sometimes it could be 786 also. So these are all, it's not according to the book what it is in there, printed in there. So it's all only for our it's only for our what for identification, that's it. So 1, 2, 3, 4, and the fifth wave got extended. So because when at what time frame why the fifth wave got extended means sometimes the wave 1 and wave 2, if it is in, sometimes if it is in that one range of 1618, the fifth wave also got extended. So for example, if it is completed here, the fourth wave is 1, 2, 3, 4, 5. Here is the third wave means, for example, I am talking about that. If it is the fourth means 1, 2, 3, sometimes it will keep on extended third, fourth, and it will go beyond this also 1, same. So it will do like that also. So this is a perfect example for that fifth wave got extended. And the same thing I'll show you in US oil. Here, that what I said, sometimes it could be, once again, here also that 5-wave structure, what I said, and that first wave, lot of times the first wave will got extended sometimes in that wedge formation. Wedge means like this kind of formation, it's looking like that sword. So this is the wave 1, wave 2. So these are all the diagonal patterns we will see later onwards, but it will most of times the wave 1 got extended only, the maximum I had seen only in the diagonal patterns. So this is a wave 1, this is a wave 2, this is a 3, 4, and 5. So this also got some rules. In that wave 1 will be the bigger one, and it will be lesser than the wave 1, the third, and the fifth wave is also lesser than the wave third. So you got understand Wave 1 is the bigger in the diagonal pattern, and wave 3 is the smaller, and wave 5 is also smaller than the wave 3. So these are the diagonal patterns. Most of them you will get in the next video or after the correction part. So we will see in the diagonal patterns like lot of things. In that ending diagonal is only comes in the end of the trend, that means in the C wave and fifth wave, and leading diagonal means only it occur only in the wave 1 and wave A. So this is called as leading diagonal, and if it is comes in that end of the trend same pattern like this, it is called as an ending diagonal pattern. So here we can, as an example, that wave 1 is got extended, wave 2, wave 3, wave 4 and wave 5. So this is also got the wedge formation. So in this the rules will violate. The wave 1 and wave 3 and wave 4, it's above the wave 1. So only in the diagonal patterns it will overlap the wave 1 and wave 4, or wave 4 will enter in that wave 1 territory. So wave 1, 2, 3, so 4 is entered in the wave 1, and then 5 is got completed. So like this kind, only in the diagonal pattern the wave 1 and wave 4 will meet each other. Apart from that, in the bullish it is not allowed, as I explained here. So thanks for watching this. You can again and again watch this, apply the in the real market. It's little tough, you have to understand, and I think hope it is very useful to you to start that Elliott wave. So thanks for watching, and see you in the next video in the diagonal patterns. Have a nice day.